Good morning, Council President and Council members. I'm Erin Roseman, Director of Finance. Today, I will present to you an overview of the Finance Department, starting with what we do, and then we will transition into the current state of the city's finances. Next slide, please. First, I'd like to start with sharing our mission statement that guides our daily activities. The Finance Department proudly serves as the fiscal steward of the City of Oakland and is committed to ethical, efficient, and responsible financial decision-making and use of the city's assets and resources. We in the Finance Department strive to foster a culture of integrity, accountability, teamwork, and respect while providing quality governmental financial customer service. Next slide. We endeavor to embody those principles in our daily activities and our core services. The core services of the Finance Department provided across 5 bureaus are recording and safeguarding the city's assets, providing timely reports, developing balanced budgets, processing payroll. Next slide, please. Processing payroll, processing payments, collecting and recording and reporting on revenue, procuring materials, supplies, and services, managing the city's investments and debt issuances, and preserving our strong credit rating. The executive team charged with leading these services are myself, Erin Roseman, Araceli Harris, who leads the Finance Admin Bureau and Internal Fiscal Services, Brad Johnson, our Budget Administrator, who leads the Budget Bureau, Steve Walsh, our controller, who leads our citywide accounting team and purchasing, Sherry Jackson, Revenue and Tax Administrator, who leads the Revenue Bureau, David Jones, Treasury Administrator, who leads the Treasury Bureau that oversees cash, investments, debt management, and the PFERS retirement system. And finally, Anjali Saxena, who's our payroll manager charged with payroll management and CalPERS retirement. Through the leadership of my team and within these bureaus, activating a total of 155 FTEs, this department engages in several financial management activities. They are revenue collection, budgeting, operating and capital, economic forecasts, cash management, debt issuances and management, financial reporting, accounting, grants management, retirement reporting, liability management, financial policies, and not the least, performance measures. In pursuit of these, the Finance Department's core services, we are also pursuing key initiatives that address some of our challenges and to provide innovation to our internal departments and our residents of Oakland. A fair number of our initiatives are technology related and affect all of the city's departments. The city's financial system, Oracle, is the backbone of the city, and we're taking efforts to increase its stability, reliability, and provide enhancements. With the assistance and integral coordination with ITD, we have been able to engage in a transition to the cloud. At the completion of the cloud lift and shift, we will be able to turn on necessary enhancements that provide productivity increases for many of our departments, such as HR in the NeoGov integration and enhanced services for vendor interactions. In the meantime, as we're going through the cloud conversion, ITD has also assisted finance in creating an AP portal for vendors to submit invoices and to allow the city to better track these documents to ensure a shorter turnaround for vendor payments. We are also pursuing citywide capital planning. With the passage of Measure U, the infrastructure ballot measure of 2022, and the impending completion of the funding of Measure KK, we've started to call together a coordinated citywide effort to provide comprehensive capital program for a 10-year horizon. This dovetails with gathering a full assessment of all the city's assets and managing the issuance of debt in accordance with our new GO bond policy that requires a 10-year look ahead. We are also advancing equity in our financial documents and in our practices in this department. Specifically, as you've mentioned before, the council through race and equity ordinance and council directives We've included equity analysis in the budget document and in our budget deliberations. As a first step to more intimately integrating equity in all of our decision-making, you will see the impact to BIPOC communities in budget discussions of service changes, whether they be enhancements or reductions. This information has been and will continue to be included in our biennial budget documents. We're also including performance measures for each department in the next biennial budget. The various departments are working on measures that speak to their services and address equity concerns based on each of their programs. They are preliminary measures and early discussions, as deep data analysis by program is challenging with the staffing resources and the state of our technology. And clearly we just had a robust conversation about how we can better improve that. But these are the efforts that the finance department is contributing to that end. Finally, the finance department is committed to providing greater fiscal transparency. We're working towards enhancing our website to allow easier access to our financial documents. We're engaging in enhancing our staff reports to achieve greater understandability and readability. I acknowledge that we speak in complex financial jargon, and we would like for there to be a greater understanding of the financial condition of the city. And to that end, we will adjust our level of communication so that we achieve that together. The good work of the finance department can be seen in, next slide, please. The good work of the finance department can be seen in the many financial documents that we produce. These documents that explicitly show the current state of the city's financial condition are the Annual Comprehensive Financial Report, or ACFR, our adopted biennial budget, revenue and expenditure reports that are presented to council on a quarterly basis, 5-year economic forecast that's presented to council every other year in conjunction with the biennial budget, our continuing disclosures, which are documents that show the remaining outstanding balance of debt and our financial condition, our cash management reports, which show the level of cash and investments that we have and that we are investing and managing our cash and investments appropriately, and our single audit reports, which are outside audits of grants that the city has received. These all can be found on the finance department's website, but should be included in each of the council offices' libraries for your reference. Next slide, please. Now that we've covered what we do in the finance department, I'd like to move on to the current state of the city's finances. As we move through the information provided by my department, my role in conjunction with the council is to reflect the policy decisions that have been given to us, assist in informed decision-making, and have a result in fiscal stewardship. Next slide. And as we move through this, I think it's important that we provide context to the city's finances. The city has several financial entities. We traditionally think of the city as just the city, but we are more complex than that. We are inclusive of the Port of Oakland, the Oakland Redevelopment Successor Agency, Police and Fire Retirement System, and we are a joint owner of the Oakland Alameda County Coliseum Authority. Each of these entities function somewhat on their own, but then are also reflected in our financial reports and all the various documents that I just listed before. And they all speak to our financial status. Next slide, please. To simplify all the information that I would love to convey to you all in my hour, I've tried to boil it down to 5 key indicators and then elaborate on them as we continue throughout the presentation. So I'll start with our FY22 net position of $551 million. Our next big indicator is our FY23 annual budget of $2 billion. We also have approximately 4,800 active employees that provide all the services to the residents. We have accumulated $1.2 billion in debt obligations as at the end of FY22, and also $1.8 billion in retirement liability. Each of these indicators are encompassed in the city's net position and are important factors in understanding the city's overall financial position. So I'll start with the city's net position. I like to think of the city's net position as the government's equivalent of a private company's bottom line, or what is the city's net worth? And so the city of Oakland's net worth at the end of FY22 is $551 million. This is comprised of all the assets minus all the liabilities. And this number and this expression can be found in our annual consolidated financial report. Next slide, please. The remaining indicators that are encompassed in the net position, we will dive into them individually, and my colleagues and I will delve into the specific areas, starting with revenue. So with that, I'll hand the presentation off to Sherry Jackson, our Revenue and Tax Administrator, to go through the next section.
Thank you, Erin. Good afternoon. My name is Sherry Jackson. I'm the Revenue and Tax Administrator for the City of Oakland, and I'll cover the revenues which are outlined in the city's operating budget. Next slide, please. So I would like to start off by highlighting some of the revenue limitations that really restrict or limit the city's ability to increase taxes and or raise revenues. 3 of them are listed here on this slide. The first was Proposition 13, which passed in 1978. And this restriction prohibited the city from increasing taxes based on the underlying value of a real property. Then we had Proposition 218, which passed in 1996. And this proposition requires the public to vote in order for us to improve or raise our general purpose taxes. And then finally, Proposition 26, which was passed in 2010. Again, this proposition here restricts our ability to raise revenues through the fees and charges that we ask the citizens to pay for services they receive throughout the city of Oakland. Next slide. This pie chart here really captures all of the various taxes and sources of revenues that the city receives. As Erin mentioned in her slide, it's a little over $2.2 billion. And again, it's mostly comprised of taxes, service charges, and transfers. Next slide, please. We're going to highlight 4 of our top revenue sources that come into the city. The first would be our property tax, and this raises $280.45 million. Again, these are taxes that are associated with properties that individuals own throughout the city. Then we have our local measure taxes. This raises roughly $328.97 million. These are local measures that, again, are approved by our voters, and the taxes that are collected are restricted for specific purposes. As you will see, there are some measures, Measure AA, Parks, Measure Q, Measure D. So when we have the voters vote on these measures, the monies that come in are restricted for those purposes. Next, we have our real estate transfer tax. This tax brings in roughly $112.2 million. It is a progressive tax, meaning as properties change hands throughout the city of Oakland, the underlying value of that transfer is then taxed. And we'll get a chance to look at what those tax rates look like on the following slides. The next bucket is our business license tax. Again, this is another progressive tax, and it was recently updated, and the Measure T, which was passed by the voters in November of last year. This brings in roughly $111.8 million. Next slide, please. So when we look at this illustration here of the property tax, in the picture on the left, you see a medium home value of $1 million. And so to illustrate it, let's say a person purchased a home today in the city of Oakland, and that home cost them $1 million. Well, the picture in the center depicts a copy of a tax bill that they would receive, along with the approximate amount of taxes that they would have to pay based on that home price of $1 million. The far right box shows what revenues the city would receive of that property tax bill. So out of the $15,000 that's reflected on that tax bill, the city receives roughly $13,000 or 83% of the taxes outlined on that bill. Next slide, please. Again, we'll go past this slide and we'll look at the measures. So on a tax bill, you're going to have your ad valorem tax. And the ad valorem tax is basically a tax that is attributed to the underlying value of the property. So in that illustration where the home was $1 million, there would be the ad valorem tax associated with that value. And then in the other red boxes, you're going to see a number of taxes. So city emergency, you have your violence prevention, you have your measures for the library. These are local measures that the residents of Oakland have voted on, and they have been approved to be added onto each person's tax bill who owns property within the city. And we call these local measures. Next slide, please. So looking a little closer at these local measures, some of them that we want to highlight here are our landscape and lighting district, which brings in roughly $19 million. We can see where the priorities are of the city, because if you look at the library services retention, along with the Oakland Public Library Preservation Act, you can see that these measures here bring in close to $33 million in taxes, and they are restricted for specific purposes. Next slide. Another tax that we want to talk about is our vacant property tax. Now, this tax is not charged to every single property owner within the city of Oakland. It is a tax that is assessed if your property is in use for less than 50 calendar days in a year. You will pay $3,000 or $6,000 per parcel, whether your property is a residential, a non-residential, or a commercial property. The goal is to increase the use of these vacant properties and to reduce homelessness, as well as to provide additional resources for the city. The next tax we have here is our sugar sweetened beverage tax. This tax was estimated to bring in $8 million, and it charges 1 cent per ounce on the distribution of sugar sweetened beverages within the city of Oakland. Again, this tax here was introduced to provide resources to make awareness around these sugar sweetened beverages and to improve and educate the public on health. Next slide, please. When we look at the real estate transfer tax, this again is an example of a progressive tax. So as properties change hands throughout the city of Oakland, there is a tax that is due based on the value of the underlying transfer. And the tax being progressive starts at 1%, and it can increase up to 2.5%, depending on the value of that transfer. The transfer tax is estimated to bring in $112 million. Next slide, please. And then we have the business tax. So as was mentioned, in November of this past year, the Oakland voters approved Measure T, introducing this progressive tax, which basically imposed the highest rates on the highest gross businesses. It is estimated to bring in $20.9 million, and it would contribute to the overall annual revenue that we receive within the city. Next slide. And then we talked about our service charges. When we were talking about the revenue limitations that were introduced with Proposition 26, this is an example of that. We charge service fees to individuals who use various facilities and services throughout the city of Oakland. However, we do not charge fees for profit. They are to be cost recovering so that we can provide the services to the residents of Oakland. And so this is an illustration of what those fees look like. And all of the fees that we charge are outlined in our master fee schedule. Next slide. Again, looking at this pie chart, it differs from the first where we showed the 2.2 billion, in that the 2.2 billion slide represented all of the revenues and all of the funds. This slide here shows the revenues that are appropriated to the general purpose fund. Again, primarily being taxes and transfers and the service charges. And this amounts to roughly $8.72 million. Next slide. And I'm going to turn it over to Brad Johnson, who will continue the presentation on the expenditures. Thank you.
Thanks, Sherry. My name is Brad Johnson. I am your budget administrator. Can everyone hear me? I think so, and I'm hoping that's a yes. Next slide, please.
Yes.
Appreciate it, Councilmember Reed. So I'm going to walk through the expenditure side of your budget, which is the other side of what our revenue and tax administrator just walked you through on the revenue side. So in total, the city spends just under $1 billion of its annual budget on personnel. It's by far the largest and most important cost for us in our city. Our people are our most valuable resources. We spend just over $500 million on operations and maintenance. That's our keyword for things like contracts and supplies. We spend just under $200 million on debt and just over $100 million on capital acquisitions for construction and equipment. And I'll talk more about each of those categories as we walk through it. Your biggest category is your personnel costs, so keep that in mind. Next slide, please. Those expenditures are divided up across departments citywide. The largest department in the city is actually our non-departmental department, which sounds a little bit strange and weird. That is where we budget our debt service, our insurance, other things that sort of have a citywide scope. So whenever you look at a budget document, you'll say, what's that non-departmental? Debt, insurance, again, other citywide activities that are of that nature. Of our operating departments, our largest department is the police department, followed closely by fire, public works, DOT, and our capital improvement program. And again, all this data that we're showing you on screen is available in detail that you can play with the data on in our online budget book, which is linked and we can make available to you as well, but it's available for the public. Next slide, please. The majority of, when we break those departments into categories, you can see that the largest category of services we provide to our public are related to public safety and violence prevention, critically in departments like police, fire, and violence prevention, but lots of our other work across our other departments is also geared toward this idea of public safety. Next slide. Let's talk about personnel and overhead. As I mentioned earlier, just under $1 billion in your budget. This is the most important and the largest category of city expenditures. Personnel includes things like salary, but also overtime, retirement costs, fringe benefits. It's all built into our negotiated labor contracts with our bargaining units, and that goes through the proper labor process. An important note that I would give you all now is that those retirement and fringe benefit amounts account to between 44 and 48% of the cost of a position. So it's not just the salary that you pay, but you will pay almost up to an equal amount in retirement and fringe benefit costs for each person. And again, our people are our most expensive, but our most valuable and critical resource. So it's really important that we're focused on that side of our budget. Next slide, please. I mentioned that I mentioned that just under $1 billion supports roughly 4,800 staff citywide. And again, to mention our largest department on personnel is the Oakland Police Department with 1.2 thousand people. And again, a budget of $270 million. Next slide. O&M. This is a really, really critical, and I see my camera froze and I was ready for this just in case. So give me 1 second. Apologies. Hopefully you can see me as well now. O&M is a critical, is a key descriptor of things that are non-labor related within the city of Oakland. So when we have things like supplies, materials, contracts, our internal term for them is operations and maintenance and O&M. This is a really important term for you because we as financial people and departments will often throw it out as jargon, but when you hear that word, think about things that go through our purchasing process and purchasing system. Next slide. Debt service. We use debt to generate upfront resources to pay for things, most critically capital improvements. Those capital improvements can include things like Measure KK, which was passed in, I believe, 2016, that has provided funding for affordable housing, transportation, and public works infrastructure. It will also be where it will also be the same place that we pay for resources for Measure U, which was just approved by the voters last November. And again, those are all through general obligation bonds. There's other kinds of debt like our sewer refunding bonds and other debt throughout the city. Next slide. Capital acquisitions. So one of the key things that we do with our resources is we acquire assets citywide. Those assets include the construction of things like roads and buildings, but also the purchase of vehicles, things like everything from a fire apparatus down to a standing lawnmower. We also have software systems that we buy and tools like radios and computers. And then these are all capital acquisitions. And we spend just over $100 million on those. Next slide, please. I'm going to walk you a little bit through our budget process that we are engaged in right now. Key players in our budget process that have shaped this process in the past and will continue to shape it in the future include all of you as policymakers, but also our residents and our city and city staff. Next slide, please. There are key guiding principles that we undergo and that we have to follow in our budget process. And those guiding principles are driven and focused are rooted in some city policies, but also external policies. So we haven't mentioned yet our consolidated fiscal policy, or often abbreviated CFP. That's our sort of internal guidelines and set of structures for fiscal policy and development. We have mentioned our city's commitment to race and equity, which is a citywide ordinance, which we try to follow in setting up our budget process. We also have external policies imposed on us through the GAN appropriations limit and the California Government Code for how we provide and how we structure our budget process. Next slide, please. Let me walk you through that budget process a little bit. And it's a little bit long and exhaustive, so I will do my best to move quickly. We actually began development of the biennial budget way back in September. And we do that through a process called baselining. That is assessing what the costs of providing the current level of services and what the amount of revenues we will bring in given current policy would be. Simultaneously to do that, we field a poll of our residents on what their budget priorities are. We kicked that off in December. We will bring the results of that poll to you when we have our council priorities workshop in February. Currently, departments are in the process of developing proposals, ideas, solutions to whatever gaps are presented in that baseline development process. In March, we will release our 5-year forecast, and that gives you a finalized estimate of both what we are going to be balancing in the next biennial, but also puts it in a medium-term context. So we can look out 3 more years and make sure that our fiscal decision-making that we engage in our budget processing has that, again, mid-year lens to it. On the 15th of March, each council member will individually be able to submit priorities, ideas to the mayor and city administrator for inclusion in the proposed budget. In late March, the mayor and city administrator will be making finalizing decisions for that proposed budget. So again, we really have to get those council priorities by March 15th so the mayor can take account of them when formulating this her budget. In April, and this is a new process, we will have the responses back from our new equity-informed community grant process, where we have done an RFP for organizations that which provide services to the community. On May 1st, we will release our proposed budget from the mayor and city administrator. And then in May through June 30th, we will have a series of community forums, council meetings, public hearings. In late May, we will have forums in every single one of the council districts. By mid-June, the council president and any of you as council members will present amendments to the proposed budget. And by the 30th June, we will adopt a balanced budget. Next slide, please. I'm going to leave you with this, and this is not necessarily great news to leave you with, but it's important for our context. This information was provided to you in our fourth quarter revenue expenditure report, first quarter revenue expenditure report, which was published last calendar year in November and December. That report provided a very preliminary estimate of what we think our surpluses and shortfalls are going to be over the next biennial. In our general purpose fund, which is the fund that we spend most of our time dealing with, we are estimating that the deficit in each fiscal year exceeds $100 million. This is a very, very significant resource shortfall that we will need to resolve through the coming budget process. And again, we look forward to working with you to do that. With that, next slide, please. I'd like to hand it over to David Jones, our Treasury Administrator, to walk through debt obligations and management. Thank you all.
Thank you so much, Brad. My name is David Jones, Treasury Administrator for the city. Very nice to see all of you and hear from you today. In front of you on this particular slide are the credit ratings for the city of Oakland's various bonds. And as you can see, there are different buckets or different instruments, if you will, general obligation bonds, lease revenue bonds as such, and rated by Moody's, Standard & Poor's, and Fitch. And I just wanted to say that the city has very, very strong credit ratings. The credit rating agencies really look to a very solid management and prudent policy-driven city as well as finance team, and as it's shown with these high credit ratings of the city of Oakland. And one way you can look at it is the higher your credit rating, the lower your cost of funding. So essentially reduces your cost of borrowing because it reduces the amount of risk. Next slide, please. For you on this slide today is kind of what we call our debt profile. It's all of our outstanding debt related to different bonds, general obligation bonds, lease revenue bonds as such. To the right, you'll see the original par. That was the issuance amount, and then outstanding par right now. So as bonds move through their maturity cycle, the outstanding par amount is reduced. And then the next columns show the principal and interest that is paid on those particular bonds. Principal is usually paid once a year and interest is paid twice a year. Next slide, please. Once again, this is just a continuation of the prior slide, just kind of outlining the other obligations that we have, which in total are about $1.28 billion. Next slide, please. Okay, debt authorization. What happens is that for general obligation bonds, we go to the voters and they, for the city of Oakland, that is, and they will vote on a measure to whether to approve or not approve it. It has to pass by 2/3 majority. Since I've been with the city almost 25 years, the voters have been overwhelmingly supportive of measures on the ballots. Measure DD was passed in 2002. That is for estuary and Lake Merritt improvements, 2016 Measure KK, which was housing along with infrastructure for capital facilities and Department of Transportation for paving projects. And as Bradley mentioned earlier, the voters recently approved Measure U for about $850 million for various infrastructure projects as well as affordable housing as well. The remaining authorization that we have for these issuance, Measure DD, there's about 35 million left that is unissued. For Measure KK, approximately 85 million, and then the entire 850 million for Measure U, which was just passed by the voters in November. Next slide, please. Debt policy. The city has had a history of doing a debt policy, outlining the parameters of what our debt profile should look like. This is really, really, really important for the rating agencies. And it really goes back to the previous slide, or the first slide that I actually showed you, where we have those really, really high credit ratings. This is the area that the credit rating agencies really focus in on, because they want to know, what is management doing? What are your parameters? What are your guidelines? So you can see that the approach to debt management is ensure high credit quality, preserve flexibility, maintain full compliance, which I will talk about on the next slide, and ensure timely payments of your debt service. And the city has, a GL bond policy as well, as outlined below. Next slide, please. Okay, so this here is your typical timeline. Bradley walked you through the budget process, but we have a process here for debt issuance. As you can see, the first item is identification of projects to be identified. So we work with the departments on coming up with the projects. Then we put together a financing team, which would consist of advisors, legal advisors, fiscal advisors. We all have, come together and start drafting documents, legal documents, that is, in conjunction with our city attorney. We take those particular resolutions to finance committee, get council approval, and then we will go in front of the rating agencies to get the credit rating for that particular issue. And then that's when, the fun stuff really, really starts, when we start marketing our bonds, because the more investors we have interested or appetite for the city of Oakland's bonds drives down our cost of funding. And that's what we're trying to achieve, the lowest cost of financing. And then we will price the bond issue, and then we will close the bond issue typically 2 weeks after pricing. And this whole process takes, 4 to 6 months. So it's pretty lengthy, because there are, different things that we have to go in front of each other, and it's a pretty lengthy process. And then what I was talking about on the previous slide was compliance. So after number 8 is done, where we close the transaction, that's not it. That's number 9 is when the real work starts, because we have so many different covenants that we have to adhere to with regards to disclosure, arbitrage, and all these things are done for the benefit of the bondholders. So that, can go on for as long as the particular issue is outstanding, which could be, 20 or 30 years, which, is a typical structure. Next slide, please. Now, moving on to long-term liabilities, I will turn it over to Mr. Stephen Walsh, the city controller.
Good morning, council members, members of the public. David Jones has just given you an overview of the city's long-term debt obligations. In the next few slides, I'd like to talk about another form of long-term liabilities, namely the historic commitments that the city's made to employees to help fund their pensions and healthcare costs after they retire. Taken together, these two categories of liability, pensions and retiree healthcare, are even greater than what the city owes on its bonds. And unlike the bonds, we fund most of these pension and retiree health expenses from general revenues rather than from voter-approved property taxes. So these have a substantial budgetary impact on the city. So let's talk about retiree health benefits first. The accounting term for these is other post-employment benefits, or OPEBs, but it's really health insurance that we're talking about. The city has made commitments to its employees over the years to fund a portion of their health insurance costs when they retire. Our most recent estimate pegs this commitment at about $617 million. The city made changes to retiree health beginning in 2019 that reduced future benefit costs, but it's still a substantial liability. Around the same time, the city implemented a policy to try to reduce this liability over time. And based on this OPEB policy, the city makes annual deposits to a trust. And we estimate that we will have set aside enough funds to cover this liability by about the year 2040 if we continue this trend. Next slide, please. The city's long-term liabilities for pensions are a little more complicated. Oakland actually has 3 different pension plans. The oldest of these is the Police and Fire Retirement System, which we usually refer to as PFRS, PFRS. PFRS is what's called a closed pension plans. It actually stopped admitting new members 47 years ago in 1976, if you can believe it. Currently, PFRS has a little over 700 remaining members, and that number gets smaller every year. The city's other 2 pension plans are with the California Public Employees Retirement System, or CalPERS. There's one for sworn city employees, which we refer to as the safety plan. And then there's one for everyone else, which we call the miscellaneous plan. There have been changes to the benefits available to employees over the years. So city employee contribution requirements, as well as benefits, depend on the date when you were hired. Next slide, please. I'm not going to go into too much detail on this, but the upside of a timing issue is that employees who were hired after 2012 and 2013 have significantly reduced benefits compared to those who were hired in prior years. Pension benefits are also generally more generous for sworn employees than for non-sworn. And in addition, Oakland doesn't participate in Social Security. So the pension is what most employees will be retiring on, will be relying on for their retirement. Next slide, please. We have some additional details on this slide on the different tiers of CalPERS eligibility. The pre-2012 hirees have the most advantageous plan. There was a brief 6-month period where the city actually imposed a more strict system, but then that was superseded by state legislation referred to as PEPRA, so that beginning in 2013, all employees are subject to the same new benefits and eligibility requirements, which you can see from the table are more stringent than the earlier plans. Next slide, please. So, sorry, just a second. The city has several policies that target these long-term liabilities. I mentioned the OPEB policy earlier, which includes a commitment to deposit on an annual basis an amount that's equal to 2.5% of the city's payroll costs to a trust to fund these benefits. In addition, the consolidated fiscal policy, which I think Brad mentioned earlier, I may have as well, commits at least 25% of excess real estate transfer taxes received each year to help pay down long-term obligations. That is what I've got on long-term liabilities. I'm going to hand it back to David at this point.
Thank you so much, Stephen. Next slide, please. On this particular slide, it shows the cash and investments here at the city. September 2022, roughly $2.1 billion. And our portfolios, as you'll see below, there's the City of Oakland portfolio, which is comprised of the port as well. ORSA, which is the redevelopment successor agency. It has its portfolio, as well as our trustee bond portfolios that are governed by different bond documents and indentures as such. But all of our investments are highly regulated by the California Government Code. So we are very, very conservative in what we can invest in, which instruments we can invest in, which instruments we cannot invest in. And as you'll notice, our guiding principle of investing is safety, liquidity, and yield. Sometimes you'll hear it called SLI, but that is the objective of the portfolio is to preserve safety first, and then liquidity, and then yield. And that is basically, governed by California Government Code 536001. And now I'll turn it over to Stephen for the next 2 slides.
So let's talk about fund balance and reserves. We'll start with fund balance. But fund balance is an accounting concept. It represents all of the city's assets, all the city's buildings, all of its facilities, all of our cash, minus all of its liabilities. Everything we owe that's outstanding, including all of our debt obligations, as well as the pension and retiree health liabilities I mentioned earlier. So basically, it comes down to everything the city owns minus everything the city owes to others. That's how we get to fund balance. In a year when the city brings in more money than it spends, fund balance will go up by that amount. When our expenditures exceed available revenues in a given year, which did occur during COVID, then fund balance can go down. Total fund balance represents the accumulation of those annual gains and losses over time. The table on this slide comes from the city's annual financial report and provides details on the components of the city's fund balance. The first column in this table is for the consolidated general fund, and the remaining columns are for things like grant funds or capital funds, which are generally more restricted in how you can use them. The accounting rules require the city to categorize its fund balance based on how much discretion it has to use these funds. Items towards the top of this table have more restrictions, and items towards the bottom have fewer restrictions. The row in this table that's got the red box around it is the city's unassigned fund balance. This is fund balance that is, relative to the other categories, unrestricted and generally available at the council's discretion. Total unassigned fund balance for all governmental funds as of June 30th, 2022 was just under $200 million. Next slide, please. Fund balance is one of the ways we measure financial flexibility from an accounting perspective. In addition, the city maintains 2 cash reserves that can provide direct financial support during downturns. These 2 reserves are known as the General Purpose Fund Emergency Reserve and the Vital Services Stabilization Fund. These reserves were created pursuant to the council-approved consolidated fiscal policy, which also establishes targets for them. The General Purpose Fund Emergency Reserve is sized at 7.5% of General Purpose Fund appropriations, or $64.5 million. The Vital Services Stabilization Fund has a target that's roughly 2 times this amount at 15% of General Purpose Fund revenues, but it's currently at $10.5 million, which is well below that target. One of the reasons for this is that the Vital Services Stabilization Fund was depleted during the first year of the COVID pandemic, and the city has begun to restore it over time. At this point, I will hand it back to Erin to continue.
Thank you, Stephen. I appreciate that. As we've talked about the city's budget and the city's financial entities, I wanted to call out just briefly the Oakland Redevelopment Successor Agency. The Oakland Redevelopment Successor Agency, or ORSA, as we call it, is a component unit of the city. And the city council is the decision-making body or the board of ORSA. ORSA was created as a result of the disillusionment of the former redevelopment agencies. And there was a finding of completion made in May 2013. The State of California Department of Finance is charged with ensuring the winding down of the former RDAs. And what that means is they don't want cities or the successor agencies to continue on the work of the former redevelopment agencies. They want to see it come to an end, and they're charged with ensuring that there is an end for all of the redevelopment agencies. The County of Alameda Oversight Board approves for the entire county the anticipated budgets for the successor agency prior to it going to the Department of Finance for final approval. And as a reminder, the City Council acts as the ORSA board. Next slide, please. So this slide is to provide an expression of how ORSA interacts with the city's budget and property tax revenue. I wanted to ensure that you know that for FY '23, ORSA has remaining obligations of about $437 million stretching to about 2040. So we wouldn't expect that the ORSA agency could be completely dissolved until the termination of the final obligations or bonds in about 2040. The chart here shows how the property tax revenue is collected from the property tax owner, then going to the trust with the county, and then is passed through or distributed to all the taxing entities. You'll notice that the orange box is the amount that's distributed for ORSA obligations. Next slide, please. This chart is indicative of, or is intended to show the relationship between ORSA obligations and revenues, property tax revenues, residual property tax revenues that come to the general purpose fund. So as the orange bars decrease, which are the obligations of ORSA, then the darker turquoise bars increase, which is the residual revenue that can come to the general purpose fund. And as we continue to wind down ORSA, then the revenues, the property tax revenues then become unencumbered and go to the general purpose fund. Next slide, please. As the council and the board of ORSA, you adopt the budget or the ROPS, which is the recognized obligation payment schedule for ORSA that is submitted to the Department of Finance. And that process happens before the regular biennial or annual budget process to inform how much property tax revenue can then be provided to the city entity. And we use this so that we have better tax revenue estimates in the general purpose fund as we go forward in our annual budget processes. Next slide. There are a few departments that are charged with winding down ORSA, and that is Housing and Community Development, Economic and Workforce Development, and the Finance Department. We manage the contracts, the remaining obligation contracts, the remaining debt obligations to the end of the agency's existence. Next slide. And so finally, we leave you with a recap of the financial documents that we produce that support all of the information that we've provided to you and a way to access them. And we welcome any questions that you may have.